CNBC out with its latest Fed survey showing some growing concern about the market's valuation. Let's go over to Steve Liesman. He's got details for us. Steve.
Hey, David. Yeah, respondents to the CNBC Fed survey expressing as much concern about overvaluation in the stock market as they have in at least a year. S&P seem pretty much flat, even down, according to the average respondent. 37 respondents this time. 6344 was 6133 in June, so it's up from there, but below where the market is right now. A good gain expected for next year, with a 9% gain from the current level up to 6936. Significantly overpriced, though. 14% say that's the case, and 70% say it's at least somewhat overpriced. Add them two together, that's 84%. Just 16% say the market is correctly priced. That is the highest level of concern about overvaluation that we've seen in about a year. One offset, though, could be what the Fed does. The rate outlook sees 2 cuts priced in for this year, 2 for next year, for about 1 percentage point in cuts expected through 2026. But note here, the expectation is for little relief on the long end. The 10-year is seen ending the year at 436, about where it is now, and just a little bit of a decline expected through 2026, 425. So 100 of cuts on the overnight, but not much on the 10-year. Enabling the Fed to cut, though, is the growing belief that tariffs will end up being one-time price hikes. That's the view of 51% of our respondents, up from 43% in June, and 27% see it as a road to broader inflation. No change expected at this meeting this month, but 65% see a cut in September. That belief comes along with growing certainty about the impact of tariffs, though it remains the number one risk to the economic expansion. Guys?
So do you think we'll hear a little bit of a tone change from Powell this week, a little more amenable to cutting rates because the inflation numbers have been more benign?
It could be, but it also depends on the horse trading that goes on with the statement, Sarah. As you know, we'll see if he does tee up a September rate cut as the market expects.
Steve, we'll see what we get tomorrow. Thanks a lot, Steve Liesman, this morning.